The newest data from Redfin just came out, and the California housing market is moving in a variety of different directions. We have parts of California that are booming, parts of California that are crashing, and some that are just putting out some weird data. So we wanted to go over the monthly market update to see what's going on per county in different areas of California. So to do an overview, the way we like to do the numbers here is we look at a 3-month period to help smooth out some of the outliers and the anomalies in the data. We take a look at the median sale price, and this is data published by Redfin and put together by yours truly of the California Housing Collective. So looking at an overview on the states, there are 58 counties in California. Of those 58, we are looking at a year-over-year decline in 31 counties. So over half the state experienced a year-over-year decline in median sales price, whereas the other 27 saw an increase in sale price. At the very end, we'll go over the averages and what this looks like for the statewide level. But before that, we wanted to break down the data in a few different ways. The first thing that we want to take a look at is the bottom 5. These are the 5 counties in California where prices are falling the fastest, and there is not a single normal piece of data in here. I will explain. The county that's falling the 5th fastest in California is San Benito. San Benito is the only inland county in the Central Coast area here in green. Fell a little bit over 5% year over year median sale price from $791,000 to $750,000. If you follow the data, typically what happens is you see an increase in inventory leading to a decrease in sale price. And the exact opposite is happening here. So the available homes have actually dropped about 11.5%, which normally nudges prices higher. But again, we have weird data sets for this round of the data published for January of this year, where you have the median price dropping in San Benito and inventory dropping pretty dramatically at 11.5%. But then the homes sold ticked up, basically held even, but it ticked up a little bit at 3.68%. So that's a little bit of an overview on San Benito. Going just north of that is Alameda, California. Year over year drop of 5.36% in the median sale price. Alameda is just more expensive, so a little bit over $1 million to a little bit under $1 million now at $960,000. Inventory stayed pretty constant, so up about 0.5% year over year, but the homes sold is dropping, so about a 2.5% drop. So the price is going down, and the home sold is going down while inventory is staying pretty constant. Number 3 is Lassen. Lassen was number 1 for, I think, 2 months in a row. So the prices are starting to come up a little bit more now. But we see for this drop is 7%. And that is actually an improvement over the past 2 publications. But pricing is still going from about $238 on average to $222 on average. The inventory continues to drop at about down 3%. And what you typically see in this situation is happening again here, where you have your price dropping, and all of a sudden homes start to move a little more. It's a smaller sample size. You're only going from an increase of 19 homes sold to 21. That's pretty common. Prices come down, activity goes up. Let's look at number 2, which is Calaveras in the northern San Joaquin Valley. This is just a bloodbath. So if you are in the real estate industry, if you're a lender, a broker, a stager, if you do interior design, if you're one of my people as a contractor in the area, when you see red all across the board, that's just a tough market to be in. So the median price is dropping 7.21%, and there's fewer homes available. So 4.29% drop in available homes, and the amount of homes sold, it's about even, but it's gone down about 2% as well. So when prices are dropping, you'd like to see that inventory rise. And as long as homes are being sold and moved, there's enough activity for housing professionals to be able to do our jobs. But when you see the price dropping and the inventory dropping and the activity dropping, that is a trifecta of a really difficult market. It's tough for professionals in the California housing industry, but it's also tough for people who are looking to buy and sell their properties. So number 1 on the list for this data set is Lake. So Lake has held constant right around a 10% decline. Now that 10% decline has vaulted it to the number 1 position. So 9.66% drop year over year from 352 to 314. And now what we're seeing is you're seeing inventory start to climb. So that is pretty normal. When you have your inventory go up, pricing typically comes down. But with that, you usually see higher activity levels. You're seeing the opposite here, where prices have come down, inventory has gone up, but now also the homes aren't moving. What that typically means is that prices need to drop even further. So I'll continue to report on this for everyone, but I would expect prices to fall even further in late. On the flip side, let's take a look at where the prices are still rising throughout California. Coming in at number 5 is San Francisco. For those of you who thought that San Francisco couldn't get any more expensive, it's still happening. So we're going from a $1.328 million median sale price to 1.385. Look at this inventory drop. It is shocking. 27% drop in inventory year over year. That's an incredible stat. It went from almost 1,500 homes available per month to a little bit over 1,000. That is an insane, remarkable drop. And if you are in the San Francisco market, either as a professional or someone looking to buy a home, I feel for you. This is a very tough market to be in where prices are still going up. The inventory has fallen off a cliff. Surprisingly, the home sold hasn't really changed that much. So that's stayed pretty constant. It's gone down 2 homes a given month, but nothing much to report on there. So coming in at number 4 is El Dorado. El Dorado's seeing a jump of 4.28% in median price over the past year, going from $639 to $667. The available homes have dropped a little bit, which makes sense. Inventory goes down, pricing goes up, and the homes sold has stayed pretty constant, right around 175 year over year. Number 3, Tehama. Hopefully I'm pronouncing that correctly. 6.71% jump. So that is a pretty big jump. But look at the numbers here. It's gone from 323,000 to 344,000. Homes are very affordable up here in Northern California. You see inventory climbing and the amount of homes climbing. This is another very strange data set. You don't typically see green all the way across the board, because when inventory is climbing, usually price goes down. We're seeing the exact opposite happening, where price is going up, inventory is going up, and the homes sold is going up. If you're a professional in this area, that's exactly what you want to see. More money on the table, more activity happening. If you're in the market to buy, or if you're looking to sell also as well, it's a very good market to be in. There's a lot of activity going on and a lot of money that is being passed around. Number 2, going as far southeast as you can in the state of California to Imperial County, almost a 7.6% increase in median price over the past year. Again, a very affordable place to live, going from $360,000 last year to $380,000 this year. Again, the inventory has climbed pretty considerably with 11% more homes available. And then the amount of homes sold has gone down. What this might mean in a data set like this is prices are getting uncomfortably high. So even as inventory climbs, fewer homes are being sold because that price point of the median 388 might just be too high for Imperial County. Now let's go to number 1 on the list. As far away as you can get, up in Siskiyou, right on the Oregon border, almost an 8% increase in median price year over year. Again, going from 307 to 332,000. Inventory's up. The amount of homes that are being sold is up. This is, again, a great place to be if you are a professional in the area. If you're looking to buy in the area, there's a lot more options available for you. And at this price point, for whatever reason, homes are still moving. So if you're in Siskiyou, it's a great place to be. Now, before looking at the statewide averages, I wanted to take a look at what's happening in the 5 biggest markets in California, because these are the counties that really drive the percentages and the perception of the entire state. So coming in at number 5 would be Orange. So Orange is the county that I live in down here in Southern California. It's about a 0.5% increase over the past year in median sale price. Inventory is starting to climb. We've had a lot of declines recently throughout the county, but about 6,000 homes are available in a given month right now in Orange County. And this data set is pretty familiar if you've looked at the Orange County real estate market over the past year and a half, where you're seeing pricing inching up, but very slowly. The available homes has gone up and down, but it's been pretty consistent within like plus minus 5% year over year. But the home sold is starting to decline. So typically, what happens if you're not selling enough homes is that naturally adds to the inventory. And as inventory rises, you should see prices start to moderate, possibly fall. Since I'm in Orange County, I'm going to be following this one very closely. The 4th biggest housing market in California is San Diego, with about 6,700 homes available in a given month as of now. The median price has ticked up a little bit, 1.2%. It's just under $900,000 now for the median price home in San Diego. And what we're seeing is very similar to Orange County. slow price growth, a little bit inventory growth, and then the amount of homes being sold is starting to fall as well. So very similar data set between Orange County and San Diego County so far. San Bernardino is different. So San Bernardino is the largest county by area in the entire United States. It's also the third largest by the amount of homes that are available for the housing markets in California. So 7,400 homes available typically in a given month right now. So prices have started to fall in San Bernardino from 549 to 540. So it's a 1.64% drop. Inventory has started to go. Again, those two are usually inversely related, but these ones are tracking with each other. And now that we're seeing prices start to go down, we're seeing a little bit more activity. So San Bernardino is up 1.5% there. Number two is Riverside. This is, again, tough market to be in, but everything is almost exactly steady. So all the numbers are red, but they're very lightly red. So the median sale price is basically held even at just about $600,000. You look at the available homes, over 10,000 available homes in a given month from last year to this year. It's very consistent there with Riverside. The amount of homes sold has inched down a little bit over 1% over the past year as well. But again, about 1,800 homes being sold. So if you're in the Riverside area, you haven't really seen a drop over the past year. You haven't seen an increase over the past year. This has been a very steady market, but it is starting to inch down across the board. Well, I expect to see prices to continue to fall, but I'd also expect to see the available inventory start to inch up. So I'd expect that middle category to go green by maybe even the next report. Now, looking at available homes, it should come as no surprise that Los Angeles is number one on this list with almost 20,000 homes available in a given month as of today, which is insane just to understand the sheer size of the Los Angeles housing market. Prices have started to fall. So from 896 to 890, that's almost a 1% drop year over year. Inventory is starting to rise, but the amount of homes that are being sold is dropping. So again, less activity with homes being sold contributes to the inventory rising, which contributes to median price fall. So this is a pretty normal market. It's one of the only ones that we have here where the data makes sense. Los Angeles is leading the charge and helping to drive prices down statewide, and also just leading with an incredible, massive inventory. So now we want to look at the data over the past year to see what's been happening in the state of California and to see if we can identify trends. What you're seeing for the median price is you had very strong year-over-year price growth about 12 months ago, where you're looking at 4 to 5%. If you look at the past 7 or 8 months, you've had 1 month negative. Every other month has been less than 1.5%. So again, the typical real estate appreciation annually is like 3 to 5%. So when you're seeing 4 to 5% growth, that's very strong. When you're seeing negative or 1.5% or less, that is uncommonly low appreciation for a real estate market. I'm still on record saying that this is going to go negative year over year for the next, 4 to 5 years. So I think my target price drop was a 30% drop by the time we hit 2030. But you need more homes available in order to make that happen. If you look at the inventory growth in the second column, you have very strong year-over-year inventory growth 6 to 12 months ago, where you have 20 to 30% year-over-year growth in inventory. If you look at these past few months, there are just not more homes being added to the market. Nobody's listing. People aren't trying to sell. You have investors who are stubborn. You have homeowners who are stubborn. People just don't want to sell. The reason we have inventory growth recently is that the amount of homes sold just hasn't really moved. So buyer demand is still really low. The mortgage application data is very low. We haven't really seen a lot of growth, even as interest rates are starting to come down. You're starting to see better mortgage loans become available. Just don't have buyers coming back, but then you also don't have sellers moving. So the stalemate has kind of, just continued on. So we're at a sort of market equilibrium where you don't have these giant numbers anymore with big jumps in pricing or big jumps in inventory. They're all pretty small. So oftentimes what that would be explained as is you've got this roller coaster that's coming up and then it levels out a little bit and we might be around the leveling out portion before it starts to come back down. So I'll continue to do the data analysis. I'll continue to do the reporting to let everyone know where in California prices are crashing, where in California prices are booming, what's happening with the biggest markets. If you have specific questions, if you want me to do a deep dive on a specific market, please let me know in the comments. If you want to push back on anything, let me know in the comments. If you have just general questions or recommendations for the future, please let me know in the comments. Love doing this for you guys. Thank you for watching. And we'll see you in the next one.